Melbourne's median apartment value just fell for the second month in a row. 3 hours north, in Brisbane, apartment prices jumped almost 19% in a single year. Same country, same interest rates, completely different story. Today, we're looking at why one of Australia's biggest cities is sitting on apartments nobody seems to want right now, while the other one can't get them built fast enough. Let's get into it.
We'll start in Melbourne because the numbers here have moved fast over the past few months. According to cautionary, formerly known as CoreLogic, Melbourne's median dwelling value sat at $822,969 in April 2026. That's after the city posted its second straight monthly drop, down 0.6%, leaving values 1.9% below the peak set back in November 2025. Auction results back that up. For the week ending April 26, Melbourne's clearance rate came in at 54.9%. Anything under 60% generally points to a buyer's market, and this is well under that. Now, the part of this story that's been brewing for years is the apartment clot in Melbourne's inner city. Docklands and Southbank have been flagged repeatedly by industry analysts as the epicenter of the city's apartment oversupply. And right now, some unit values in those precincts are still sitting around 5% below where they were back in 2020. On top of that, Victoria's tax settings have changed in a big way. From January 2024, the general land tax threshold dropped to just $50,000. From January 2025, the vacant residential land tax was expanded to cover the entire state, and there's now a 7.5% levy on short stays under 28 days, hitting Airbnb-style operators directly. For an investor sitting on a tower apartment in Docklands, the holding costs went up at almost the exact moment values went down. Builders noticed too. Apartment completions across Melbourne for 2025 were tracking at roughly half of 2024's levels, the lowest in a decade. Normally, a supply drop that big pushes prices back up fast, but buyer demand has been soft enough that even with fewer new apartments hitting the market, prices are still slipping. Rents are still climbing, up 4.4% over the year, but that's below the national average of 5.7%, and Melbourne's vacancy rate, around 1.4 to 1.5%, is looser than almost every other capital city in the country. Put it all together, and Melbourne's apartment market right now is one with leftover stock in the wrong locations, a heavier tax bill for the people holding onto it, and prices that are still heading down. No one expected the cooling to stretch this far into 2026.
If Melbourne has too many apartments, Brisbane doesn't have nearly enough. PropTrack's Home Price Index has Brisbane units as one of the strongest performing property segments in the country over the past year, with apartment values up 18.3%, adding around $125,500 to the median price. The rental numbers are even tighter. SQM research put Brisbane's vacancy rate at 0.8% in April 2026, down from 0.9% a year earlier. In raw numbers, the count of vacant rentals across the city dropped from 3,207 to 2,662 over 12 months. Rents climbed 6.7% annually, tying Perth for the highest growth of any Australian capital, with weekly unit rents now sitting around $660. The supply side explains why this is happening. Queensland needs roughly 14,000 new dwellings a year just to match population growth, and in 2024, only around 1,523 apartment units were actually completed across Brisbane. Net migration has been adding tens of thousands of new residents to the city every year, and a lot of them rent before they buy. There's also an infrastructure angle. The Cross River Rail project, originally due to open in 2026, has been pushed back, adding more pressure on inner-city transport right as Brisbane gears up for the 2032 Olympics, a lead-up period that's historically lined up with strong price growth in past host cities.
ANZ Research is forecasting Brisbane to grow 9.7% in 2026, which would make it one of the strongest capital city markets in the country this year, though they expect that pace to cool to around 1.4% in 2027 as affordability limits start to bite. CBRE's longer-range numbers are even more striking. They expect Brisbane to deliver only around 4,600 new apartments a year through 2030, against demand of roughly 16,000, which could push the vacancy rate down even further, towards 0.7%. So Brisbane's apartment market isn't in trouble because people don't want to live there. It's in trouble because way too many people do, and there's nowhere near enough new stock for them. Before we get into the rental market and what this means for investors, if you're finding this breakdown useful, go ahead and hit that subscribe button.
So which city's apartment market is really the one to worry about? It depends entirely on which side of the deal you're on. If you own an apartment in inner Melbourne, especially in one of those Docklands or Southbank towers, the trouble is falling values, rising land tax bills, and a building full of near-identical units competing for the same buyers. If you're renting in Brisbane, the trouble is a vacancy rate so tight that landlords have almost no incentive to negotiate, and rents climbing faster than wages. For investors, these two cities are basically mirror images of each other right now. Melbourne is the cautionary tale about buying into high-rise towers built primarily for investors in an area that already had too much supply. Brisbane is the cautionary tale about how fast a tight rental market can get even tighter when new construction can't keep pace with population growth. Numbers don't lie, and right now they're telling two very different stories from opposite ends of the East Coast. Melbourne's apartment sector is still working through years of oversupply, plus a new round of state taxes that are pushing some investors to sell. Brisbane's is dealing with a shortage that keeps getting tighter heading into the Olympics decade. Both of these trends still have a long way to run, and that's why homeowners, renters, and investors in both cities are watching the next few months of data more closely than usual.